Mexico's economy is booming. In recent years, the country has seen impressive economic growth, attracting the attention of businesses and investors around the world. But what's behind this growth, and what does it mean for Mexico's future? In this video, we'll explore the fascinating story of how Mexico is becoming the new China. From its burgeoning manufacturing sector to its growing list of trade agreements, we'll take a closer look at the key factors driving Mexico's economic rise. So if you're curious about one of the most exciting economic stories of our time, stick around for the next few minutes. Before we start, just make sure you subscribe to our channel for more videos like this. In the past few years, Mexico's economy has been growing at an impressive rate. In 2019, before the COVID-19 pandemic hit, the country's gross domestic product, GDP, grew by 2.2%, which is a significant improvement from previous years. And while the pandemic did impact the country's economy in 2020, Mexico is expected to rebound quickly and continue its growth trajectory in the coming years. So, what's behind this growth? One of the key drivers is Mexico's diverse economy, with several industries contributing to its success. One of the most important sectors is manufacturing. Mexico has become a popular destination for companies looking to relocate their operations from China due to rising costs and geopolitical tensions. This trend has resulted in a surge in foreign investment in Mexico, and the country has become a significant exporter of goods to the United States, its largest trading partner. In fact, Mexico is the world's second-largest exporter of manufactured goods to the U.S. after China. Another industry that's driving Mexico's growth is tourism. The country's beautiful beaches, rich culture, and vibrant cities make it a popular destination for travelers from around the world. In 2019, Mexico welcomed more than 45 million tourists, generating over $24 billion in revenue for the country's economy. Mexico is also a leading producer of oil and gas, which contributes significantly to its economy. According to the U.S. Energy Information Administration, Mexico is the world's ninth-largest producer of oil and the third-largest in the Americas. The country's energy sector has been undergoing reforms in recent years to increase competition and attract foreign investment, which is expected to drive further growth in this industry. To put some statistics behind these claims, Mexico's GDP in 2020 was $1.15 trillion, making it the world's 11th largest economy. Mexico's industrial sector accounts for around 30% of its GDP, and its main exports include automobiles, electronics, and petroleum products. The country is also a member of the North American Free Trade Agreement, NAFTA, and has signed trade agreements with several other countries, which have helped to boost its exports and attract foreign investment. Mexico's manufacturing sector has been a major contributor to the country's economic growth in recent years. The sector has grown rapidly, attracting significant foreign investment and creating jobs for millions of Mexicans. In fact, manufacturing accounts for around 17% of Mexico's GDP and employs over 2.5 million people. Mexico's manufacturing sector is often compared to China's, which has been the world's manufacturing powerhouse for several decades. However, in recent years, Mexico has been attracting more attention from companies looking to relocate their manufacturing operations. There are several reasons for this. First, Mexico's proximity to the United States makes it an attractive option for companies looking to serve the North American market. Mexico has several free trade agreements, including NAFTA, that allow for easy access to the U.S. market. This is especially important for companies that want to avoid the tariffs and trade tensions that have arisen between the U.S. and China. Second, Mexico has a highly skilled workforce and a well-developed supply chain infrastructure. Many of Mexico's workers are highly educated and trained, with expertise in fields like engineering, logistics, and quality control. Additionally, Mexico has a vast network of suppliers, logistics providers, and other support services that make it easy for companies to set up and operate manufacturing operations in the country. Finally, Mexico offers competitive labor costs compared to the U.S. and other developed countries. While labor costs are higher than in China, they are still significantly lower than in the U.S. or Europe. This makes Mexico an attractive option for companies that want to reduce their manufacturing costs while still maintaining high quality and proximity to the North American market. Overall, Mexico's manufacturing sector is becoming a popular destination for companies looking to relocate their operations from China or other countries. With its proximity to the U.S. market, skilled workforce, and competitive labor costs, Mexico offers several advantages for companies looking to set up or expand their manufacturing operations. While Mexico's economy has experienced significant growth in recent years, there are still several challenges that the country faces in becoming the new China. One of the biggest challenges is the issue of crime and violence. Mexico has struggled with high levels of crime and violence, particularly related to drug trafficking and organized crime. This has led to concerns about the safety of businesses and investors, as well as the general population. Addressing this issue will be critical to attracting more investment and maintaining sustained economic growth. Another challenge that Mexico faces is the issue of corruption. Corruption has long been a problem in Mexico, and it has been identified as a significant barrier to economic growth and development. Addressing corruption will be essential to improving the business environment and attracting more investment to the country. Despite these challenges, Mexico has several opportunities to continue its economic growth. One of the biggest opportunities is the potential for further integration into the global economy. Mexico has several free trade agreements with countries around the world, and it has been working to strengthen its ties with major economic powers such as China, Japan, and the European Union. By continuing to deepen these relationships, Mexico can further expand its export markets and attract more foreign investment. Another opportunity for Mexico is the growth of the digital economy. Mexico has a young and rapidly growing population that is increasingly connected to the internet and social media. This presents significant opportunities for the development of new digital businesses and the expansion of existing ones. Looking to the future, Mexico's economy appears to be well positioned for continued growth. With a young and growing population, a favorable business environment, and a well-developed infrastructure, Mexico has the potential to become a major economic power in the coming years. However, addressing the challenges of crime and corruption will be critical to maintaining this momentum and ensuring sustained economic growth for the long term. As we have seen, Mexico's economy has experienced impressive growth in recent years, driven by a diverse range of industries and favorable economic conditions. However, there are still challenges that Mexico must overcome to maintain this momentum and continue on its path to becoming a major economic power. So, what do you think? Do you believe that Mexico has what it takes to become the new China? What are some of the opportunities and challenges that you see for Mexico's economy? Share your thoughts and insights in the comments below. Thank you for watching this video on how Mexico is becoming the new China. And if you found this video informative and thought-provoking, please give it a thumbs up and don't forget to subscribe to our channel for more videos on global economics and business trends.